Okay, here we go. All right, let's get the show on the road.
Super, I'm excited.
I can't wait. All right, everybody. So for those who do not know me, I'm Dinora Chacon, and I am with McInerney Associates. I am a local real estate agent here in Northern Virginia, and I specialize in Herndon, Centerville, and Reston. And today I'm so excited because I've got a very special guest, and I'm so happy that I was able to get him because I know he's very busy. Gabriel Zarate with R&G. Hi, Gabriel.
Hi, Dinora. How are you?
I'm doing well, thanks. Thank you.
Hey, I'm excited.
I know you
Thank
are.
Thank you for the invite.
You're very welcome. So let me go ahead and then switch over to the PowerPoint presentation. And I'm going to be giving you a little bit of a speaking role here shortly. So sure. What I have here is our, can you guys see that yet or not? Let me see.
Not yet.
Not yet? Okay, hold on one second. Let me make sure that I heard it correctly. All right, here we go. Let's try that again. All right. Can you guys see that now for me?
Yes.
Okay, perfect. We are on business then. There you go. All right, so let me make this a little bit bigger. Okay, so there is our contact information. Like I said, I'm Dinora with McInerney, and there is Gabriel's contact information, which I will share again at the end of the presentation. But Gabriel, why don't you tell us a little bit about yourself? Sure. Who is Gabriel?
Well, Gabriel is a dad.
Awesome.
An insurance advisor for 15 years now, so we do have a little bit of experience in that. I'm with R&G Insurance. R&G Insurance has been in the market for 20 years now, since 2000. So John Rogers is the president of our agency, and we're going, I guess, like everyone else, through a lot of changes, not only because of the COVID situation, but also because we were nationwide exclusive agents for a few years, actually for 20 years. And now we become independent agents, which is great for us and for our clients and the members of our organization, because we have access to more than 15 companies. So we did become independent agents 4 years ago for commercial insurance. And it's a huge difference. When you're an exclusive agent, basically you're kind of working for that company, right? So we were representing nationwide. And of course, always trying to do the best for our clients or doing the best for our clients. But now, as a brokers or independent agents, we represent the client 100%. So we shop around for them. We do have a system, a rater system that we use, and we just tailor the insurance based on the client needs. So we can shop around with different companies, present it to the clients, provide our advice, and that's what we do. So I've been doing this for 15 years, as I say. And ties, 2 daughters, my dog Johnny. So
that's
good life, good wife, and everything's good.
You're definitely a veteran in the industry for sure. I love how the amount of years of experience, and I do love the fact that you were just saying you guys are now a broker, which means there is a wider net, right, for you guys to shop around for your clients and be able to identify their needs and be able to find that particular policy and that carrier and do a good match, right?
Yeah. Awesome. It's a different world. I mean, as I say, we were doing the same thing as far as taking care of the client, but having those outlets is just different because we can certainly shop around and do different things, and not all the companies are good for every client, so we have that access to shop around for everyone. It's just a different world.
That's awesome. Well, thank you for that introduction. So the purpose of today's Zoom call is because we want to talk about insurance, and there's so many different lines, and I thought, you know what, who better else than someone like Gabriel to talk to us about it, right? So the first one that we're going to be talking about, Gabriel, and you're aware, you know this, like the back of your hand pretty much. Let me make sure that I don't have anybody else joining us here. Okay, very good. So something that you and I deal very often on a daily basis, me as a real estate agent, obviously you as an insurance broker, is the homeowners insurance, right? When my client is looking to buy, one of the things that they have to do is get an insurance policy. So you get the call, or I do the email introduction to you guys, and then you take it from there. But help our audience understand, especially my first-time home buyers who
Sure.
may not have the slightest idea of how it works, why do they need it? And I did some bullet points there with a few questions that I'm hoping that you can answer along the way. But let's start with the basic one. Why do we need a policy, a homeowner's insurance policy? Who dictates that?
I mean, the first thing will be, we want to protect our investment. And not only that, but also, I mean, majority of people is buying with a mortgage, and the bank will also require the client, in this case, to protect that investment. So I will say that will be kind of the first thing you want to make sure if you're buying a home, whatever is your budget and the investment, you like to have protection for that investment. So that would be kind of the first why are you getting insurance, and it covers different parts of your home, and the policy provides different kind of coverage, but that would be the first situation where you need insurance. You just have to have protection very much.
I mean, why wouldn't you? Exactly. I mean, it's one of those things where if I'm going to be investing, I mean, it's the biggest investment of my life, why wouldn't want to cover that, right? And it's one of those things, and I don't know if you were the one who told me this, but it's like, you're driving away from the parking lot if you just bought a car and not having an insurance policy, and anything can happen to it, right?
Right.
So help me understand, how is the policy created? Because I know that I've seen emails going back and forth where you ask specific questions about the property, right? How do you determine what is the best coverage for that particular property and that client?
Right, and that's a good question. Let's remind something. The insurance is based on the reconstruction amount. So we get this question a lot, and is why my insurance, my dwelling, or the coverage on my policy is a lot less than the market value of the policy.
Yes.
And the main reason, as you guys as realtors sometimes send us an email and say, why is the difference, or the client probably will have that question right away.
Right.
So the insurance, the homeowner's insurance, is based on replacement cost. And we do have a tool that is called the replacement cost estimator that we use, and it's basically with the detailed information about the home, the square footage is kind of the main important, but they also, how many bedrooms, what are the finishes of the home, if it's hardwood floors, and we take all this information in consideration. We add it to the cost estimator tool, and then we have the reconstruction amount. That usually is going to be probably 80% of the market value or a little less. And the reason is, if anything happened, the insurance company will rebuild the property as it was before any event, hoping that the land will be there, because when you're buying the home at the market value, you're also buying the land. And hopefully after any event, the land will stay there, and the company will just rebuild from the ground up. And that's kind of the main way that we calculate the insurance.
So that makes sense, because I know that, again, in some of the emails that I've been copied on with some of my clients, you'll say, well, how old is the roof, right? Because then you would want to know how old it is, so that you are able to put that into the equation. And God forbid, later on you had to rebuild, then you would have an idea of how old that roof was. It was in brand new condition, and put a cost in there, right? Put a number.
Right.
Okay, perfect.
And also, there's another question related a little bit to that. The insurance policies usually don't cover wear and tear. So sometimes the clients, call us and say, hey, my roof is 20 years old, we need a replacement. That usually is not covered, because the insurance is for any kind of event or claim or anything that happened in an event, let's say, but it's not for wear and tear.
So it would have to be a catastrophic, that's the word,
correct,
right? Catastrophic event,
exactly.
For you guys to be able to use this kind of home insurance policy. It's not like you said, just to replace the roof because of normal wear and tear, right?
Yes, exactly. Yep.
So to give our audience a general idea, and I'm not going to hold you to your word here, but for their budgeting purposes, right? Where should they be thinking or looking when they're shopping around? And again, obviously every home, depending on the size, right?
Yes.
It's gonna depend on that. But how much do you think an annual policy?
Well, there are a few factors. So the first one will be the reconstruction amount, right? With using the reconstruction cost estimator. Then it's also based on the age of the owners in this case. the zip code, so the location of the home, if it's close to a fire hydrant or to a water hydrant and things like that. So there's a few factors that the insurance companies use to give you the rate. It varies a lot. So I'll give you an example here in Montgomery County. We have a home that is between 350,000 to 500,000 for the market value. The insurance should be around $600, just to give you, an idea. But then the same property, the same amount of coverage in PG County will be probably $900 a year. So it's definitely based also a lot where the home is located. And that's one of the main points, actually, the main things about the rate of insurance.
Right, that makes sense. So let me ask you another question that I get. Well, Dinora, okay, so I'm going to go ahead and get the insurance policy. When it goes up for renewal next year, should I shop around? My answer is usually yes. What determines the rate, though? Could they get a better rate than what they got this year?
The homeowners insurance is actually going up every year according to the inflation, let's say. So it is around 4%. Not always, but if there wasn't that many claims on that specific zip code, they probably will review the rate and it will go down. But the normal is that it will go up a little bit between 3 and 4%. Now, it is good, and I know you do because we work together. Usually you recommend the clients to get the homeowners insurance where they have the auto insurance. And the reason is if you bundle those policies, you will have around 25% discount, which is huge. And that's one of the things that I will, and we recommend in our agency to do. And having those 15 companies always help, because sometimes the clients have the insurance, I don't know, with Progressive. Now we offer homeowners insurance with Progressive and they will automatically have that discount. So as a recommendation, it will be always good to get a quote from your auto career insurance so you can get those discounts.
I love that. That is true, because we usually have, again, bundled up. And like you said, if we can do that, you get some savings. And why wouldn't you? So let me go ahead and just answer, ask you a question here before we move on to the next slide, okay?
Sure.
Someone's saying, all homes need insurance, even if I buy a home, but we'll rent it out. So it's going to be a secondary home.
Yeah.
Which we did have a slide about investment properties, because that's how I'm thinking. But why don't we answer that question right now to that person?
I will say even more than the primary home, and there is a reason why. You're buying this home is, again, you're doing another investment, but you're not going to be living there. So probably the people or the persons living there won't take care of the home the same way as you will do it, maybe. But also there is a liability part of it. You are the owner of the property, and if they do anything related to a civil suit or something like that, there's a liability involved. And the way for you to be protected will be to have a homeowner's insurance, or in this case will be a dwelling fire that has a liability coverage. But also I would recommend you to always ask to your tenants to provide you a copy of the renter's insurance, because on the renter's insurance, there is also a liability coverage that will cover you in case, things like that happen. But yeah, you should have insurance for an investment property or secondary home.
Fantastic point. I love that you said that. Yeah, it's actually encouraged for you to have that. And we have a little bit of another slide too about renter's insurance. But before we move on, there is another question that came in, Gabriel, for you, okay? So if I file a claim, would my policy go up immediately? Would they see that rate go up like this?
No. Usually the insurance companies do an annual review, right? So they will take a look at the policy and the claim, and also it will be based on which kind of claim it was. It won't go up automatically. If it was a catastrophe claim because of the storm or something similar to what just happened a couple of days ago, they take it as a catastrophe claim, and they won't increase your insurance because it was something that
Mother Nature related.
Right. But if it's a fire or it's just your roof, or is a completely separate and it's not related to a catastrophe, then your insurance will go up around 20 to 25%. So one thing that I recommend to the clients is also, and we do it as an agency, it's our job to provide that information to the client, and it's talking about the deductible. So you don't want to have the deductible too low at $100 or $500, and every client is different, and we have to kind of analyze case by case basis. But you don't want to do a claim for $1,000 when your deductible is $500. That means the insurance company only covers you $500, but then your insurance is going to go up 20% anyway. So I would always recommend you to do a claim when something really bad happened, and get that coverage through your policy.
I'm so glad that you brought that up, because that makes complete sense. Exactly. Why would you file that claim for?
Yeah, it happens a lot. It's good to reserve that claim for later if anything happens, or not do it.
I agree. All right. So I don't think we have any more questions regarding that just yet, but feel free to continue putting your questions up. Let's go to the next slide here. And the next one that I have, hang on one second. Here we go. Where'd it go? Investment properties, which is along the line of what you just answered, right? So I think, are you able to see my question there? Yeah. Oops.
I can see the slide. Yeah. Are the rates different?
So, what should investors consider when they're insuring their properties? Are there different factors besides what you just talked about?
Yes, and well, there is a difference between investment property that is going to be rented out and a secondary home that you're maybe buying on a lake or something that you will be using. So the secondary home, if it's going to be for you, then it's very similar to the primary home insurance coverage, because your personal property will be in the home and it's your home, right? You're just using it not that often. But then an investment property, let's go from the beginning. Let's say you're an investor and you're buying these properties and doing a flip. So that would be the first step. Then you will need a builder risk policy, which covers you while the construction is going. And it is important. Sometimes these investors, are buying a homes for $100,000, right? And they are buying cash, and they are not even thinking about the insurance. So this policy is usually for 3, 6, or 9 months. That the investors, they will have to buy it, and it's only $300, $400, $500 that will cover their investment 100%. So that will be the first coverage that an investor needs, right? Then if the home is ready to be rented, they will need the dwelling fire policy, which is the one covering the structure, but not the personal property, because the personal property will be from the tenant, but they will own the thing. So the tenant, if they like to have that coverage for their personal property, they will have to have the renter's insurance.
Okay. That's the difference. Those are the different factors. Okay.
Yeah. A little tricky, but that's the difference.
I love it. That's great. So the rates, though, would they be any higher?
Usually, no. It depends, again, the area where the home it is, but usually, actually, the investment property is a little less than the homeowner's insurance. So depending on the property, the age of the home, the age of the owners, and the square footage is the main factors of the insurance rate.
Okay. Yep. When you said a secondary home, by the lake or the river, are you guys seeing, with everything that's going on right now with COVID, are people obviously buying more maybe secondary homes, and are you seeing an influx of insurance policies coming up because of that?
We're getting more requests, so people is definitely thinking of going away and doing an staycation somewhere close to home, I guess.
Right, I bet. Yeah,
right.
I wish I could do that. Me too. All right, so let's briefly talk about flood insurance, okay? Obviously, it's something that no one wants to deal with, and one of the questions that my clients ask me is, well, how do I know I need it, right? Well, that is something that is determined once the lender has the loan, and they can check, and they say, okay, listen, you're within the boundaries, you need to get a flood insurance. So that is usually how it's done. I know that there is specific software, right, Gabriel, or not, like a database. I don't have access to it, obviously. But how do you guys figure that out? Yeah,
there's a zoning map that we have access, and we can check if the property is in a flood zone or no. But it's a floating map that actually just changed last year, and it changed a lot of things, especially for you guys, because probably that specific zip code or zone wasn't on a flood zone before, and when you guys put in the contract, we have to give you that bad surprise telling you, oh, I'm sorry, this isn't a flood zone. And the flood zone, the flood insurance is expensive. It is depending on all the factors, but it is between, I don't know, $1,500 to $2,000 depending on the home and is a separate policy. So the flood is not going to be covered under your primary home insurance or your regular homeowners insurance or dwelling fire. It is a completely separate policy. You do have a water backup coverage on any of your homeowners policy, at least most of them, including in the renter's insurance. But it's completely different. It's a sewer, backup water, or even if it's from the outside, but it has to be related to the sewer backup. It's not water from a flood. So flood insurance is completely separate from your homeowner's insurance.
Okay, very good. So you answered my second question there. What were you gonna say?
And it's a little expensive.
And you talked briefly about that there too, and I figured, I wouldn't ask about the cost for budget because it is up there.
I will.
Okay, so that is flood insurance, and I don't see any questions there. But I do want you to talk to us, because when you and I had this conversation maybe a month ago, or we help our clients, obtain the beautiful home, the homeownership dream is obtained, and then God forbid something was to happen, right? And they might not have a life insurance policy. How can that help them with this investment? Why would they want to consider a life insurance policy at the same time they're actually going to be buying?
Right. I think, as you just mentioned it, if we are investing in a home and we have our loved ones living with that, and that's probably the main reason we are buying a new home, the life insurance, I will say it has to be part of the transaction. And the reason is, if anything happened to you or to the main person bringing the income to the household, you would want to have the life insurance to cover the mortgage and the fixed expenses that your family have. So I would recommend everyone to have life insurance. It doesn't have to be a whole life insurance, which is probably the next level, let's say, when you're ready to do investment and financial and things like that. But I would recommend everyone to take a look at term insurance, at least for the time of your mortgage, 20 years, 30 years. And the younger you get the policy, the cheapest. So I will always, and we do a good amount of homeowners insurance. We, as an agency, we insure around 25% of the total home sales in Montgomery County, which is a good number. Part of our process after we do the homeowners is call our clients and offer them mortgage protection or life insurance. And the recommendation is, why not to protect your family, your home, your investment. Again, I would recommend term life insurance at least. And the difference between, and I see your second question here, is between the term insurance and the whole life insurance. So the term insurance is basically like you're renting a policy for X amount of time. You're getting a term insurance for 20 years. You're paying, I don't know, $20, $30, $50 a month for 20 years. At the end of the term, that's it. You don't have any more coverage, but also you're paying the lowest premium, right? The whole life insurance is, as long as you can pay it, you will have insurance. But the beauty of it is that you will be building cash value on your policy. So some people see as a retirement complement or a savings. And yes, you can use it that way because it's your money. At any time you can take the money out as a loan and just use it for anything that you need. But I will recommend, especially for people that is buying a home, they're getting into a huge investment, at least to get a term policy. But that's basically the difference between the term and the whole life.
Something that you mentioned there quickly, you said if you're younger, it's obviously better to get the policy sooner rather than later. And I believe that also has to do with the rate that you're going to get, correct?
Yes.
Right?
Yeah. The younger, it's based on your age, but they also will do a lab medical test just to make sure, I guess, everything is fine and give you the preferred rate. But they do have another kind of rates based on, on your health. But yeah, the younger you get, the insurance is the cheapest way to do it. It's the lowest way to get.
Right. Because I do remember, quick side note here, my dad had been a smoker for many years, and he finally quit. But when he was looking, I remember, for a life insurance policy, that was one of the questions. And of course, then the rate, because there's a higher risk of something happening to him, right? Would affect him. I remember that rate was not was shocking. We're like, oh, okay, you should have sooner. You should have never been smoking, Dad. But anyway,
yeah.
Yes, go ahead.
Go ahead.
I was going to say, we have a question, looks like, and I want to see if it's related to the life insurance.
Okay.
Yes, it is. So if you don't mind, sir, answering this question for us. When choosing an amount for my life insurance policy, what is the recommended coverage to get? Enough to cover the cost of the house plus extra?
Yes, and we have something similar to the reconstruction cost estimator for your home. We go through your financial a little bit just to make sure you have enough coverage. Usually they say that you will have to have at least 10 times of your annual income to cover the expenses for your family. So that's kind of the basic math, right? But again, especially the life insurance has to be tailored. We have to, advise the client. We, again, work with a few companies. We can provide multiple quotes, but at least 10 times of your annual income for a term policy. Yeah.
Okay, perfect. Thank you very much for that question. Yeah. Then my advice would be, please make sure that you save Gabriel's number here at the end, because I would encourage you to give him a call, send him an email, because that way, having a conversation, he can, guide you and assess you guys as to what would be the best policy. And like you said, you would have to review, right, their financials, what their life goals are, and be able to compact the policy for them, right?
Yes, yeah. And as I mentioned it to you, in part of the beginning, I'm a director of business development for the agency, but we do have a CPA and a financial advisor and things like that. So we have teams within our organization that we can, provide you the best advice. I'm not an expert in every line of insurance, but we definitely have one in our agency.
Absolutely. You've got a good army of people that can definitely, direct them to them and be able to take care of our clients for sure. No doubt.
Yeah.
All right. So then let's go to our next slide here. Renter's insurance. So you briefly talked about it.
Right.
What is covered under renter's insurance usually?
It's basically for your personal property, because the landlord, they will have insurance for their home, the structure of the home. But if you're renting, you want to have coverage for your personal property. So it is for your personal property. And again, the liability. I seen more and more at the beginning years ago, I didn't receive any specific requirements from the landlords. But now more and more we see that a specific requirement. Please add X, Y as a landlord and additional insurance this policy, and it is because of the liability. So the renter's insurance is a very basic policy, is no more than probably $10 a month, but they want that coverage, or they want their tenants to have that coverage because of the liability. But you also, as a tenant, you want to have that, your property insurance. So I would recommend it to have it. Again, if you can multi-line or bundle that with your auto insurance, it's probably going to be even less than that.
So the second question there, Gabriel, it says, who should have a renter's insurance policy? And I'm hoping, and I know you will say, everybody needs it who's going to be renting.
Yes, that's what I think. Yeah, it's like everything else. You have your auto insurance, probably hoping that never get into an accident. But if you have one, then you will have the insurance. It happens. Especially in condominiums, when there's a big, buildings and things like that. It happened in DC. I think it was 2 years ago that a big building with, I can't remember how many people was involved in a fire, and most of these people didn't have a renter's insurance. So, I mean, I will recommend to have it again. It will give you a discount on your auto insurance, so probably the monthly payment will be exactly the same, but you do have an extra coverage.
Right.
So
right. To me, it makes sense, right? Do it, bundle it up, and have peace of mind, because that way you're covered. You never know what's going to happen. And like you said, it could be, low, $20 a month or whatever that number might be, but you will have peace of mind. And that is so important. We do have one question, but I did want to just touch briefly on something you said a couple seconds ago. I did see, or started seeing a little bit more what you just said about the landlords asking for specific coverage or language. And remember, my background is in commercial property management. So I got to deal with a lot of my tenants moving into my buildings.
Right.
And the lease would specifically have requirements as to, the certificate of insurance should have the certain amounts and who should be on it, because we wanted the owners of the buildings to be protected as well as the management.
Correct.
So I think as we're progressing in residential,
Mm-hmm.
lenders are becoming more savvy, and they're asking for that type of information to be on the policy. We used to call them certificate of insurance back then.
Exactly. And that will be the same advice that you provide to your investors when they're buying a second home or an investment property. Always to tell them, make sure your tenant provided with a renter's insurance with your name as an additional insured. So
right,
everybody's covered.
Absolutely. Right, absolutely. So someone's asking, if you're living with roommates, do each of us need to have a renter's policy, or is it just one policy for the entire property?
If you want to have your own personal property covered, then you will have to have your own policy. I mean, the landlord will probably require just one. They will require just one. They won't require to every roommate to have their own. But if you have your own laptop, your jewelry, and things like that, you may want to have your own renter's insurance, just because you won't be covered under your roommate policy. You will have to have your own if you like to have that coverage.
Right. And you're absolutely right in regards to that. I just did a walkthrough for my stepsons who just moved into a new place. And the landlord just said, I just need a copy of the insurance, the renter's policy. And only one of them got it. So it wasn't a problem. Yes. Yeah. I encourage my other stepson to get it too, because he, like you said, he's got his own personal stuff too. And if something was to happen, then, that wouldn't be covered.
Exactly. And one thing that I just remember now, the renter's insurance or the homeowner's insurance policies, including the renter's insurance, will cover that laptop, let's say, that you had it in your car and somebody took it away. It will be covered under your homeowner's or renter's insurance and not under your auto insurance. So
good to know.
That's good to have a renter's insurance. Yeah. Some people, even for commercial, is kind of similar. We insure a lot of contractors and companies in general. And if they don't have a policy for their tools, if somebody steals those tools from their minivan, it won't be covered under the auto insurance. It's kind of similar to the renter's insurance. The renters will cover anything of your personal property that is inside of your car in case of any event.
Yeah, awesome. I like that. Thank you for that information, sir.
Yeah, sure.
So let's talk about the most common insurance policies that we hear all the time, right? The car. I know that this is, very basic question, but how can the people that are listening to us keep the rate down? I know already what the answer is going to be, but I want you to
drive safe first. And it's like everything else. Now the insurance companies are very competitive now. They all offer different kinds of ways for you to save money. And I would recommend you to take advantage of every tool. One thing that I see majority of the clients take advantage is the new, they call the program in a different ways, but there is a Smart Ride program that usually now you have an application. You don't even have to connect anything to your car. It's just an application that, take a look of your driving skills. It's not a GPS. Because a lot of people is like, oh no, I don't want to have a GPS in my, I don't want you guys to know where I'm going or what I have to explain it, or we have to explain it to them. It's not a GPS, it's just, an application that will take a look of your driving skills or your speed limit and things like that. That application actually, I can say almost every insurance company is offering now, and it's up to 40% discount. It's a huge discount. So I don't know, why people won't be taking advantage of it. That's one of the main things, but also, driving safe in general. If you get a ticket or accident, your insurance will go up 20, 30% depending on what it is. Don't have kids because when they are on the driving age, the insurance will go up a lot. So when you add in your teenagers, child to the policy is just crazy high, but it's what it is. They have to drive, we have to cover them. So that will help you. But again, always bundling policies will help you. You will be saving 25, 30%, having your home and auto together. So that's the best way to save. Always try to bundle all.
So would you say to the comment about, you know, if with the homeowners insurance policy where you said, listen, if you're going to file a claim and it's going to cost you $500 to, you know, take care of the repair, but your deductible is $1,000, it doesn't make sense to file a claim.
Exactly.
Almost the same rule I would say the same rule applies here, right?
Exactly. So the insurance is based on the risk. So if you made a claim, and it doesn't matter if it's because you know, I have that question again. It was a small claim. I just hit very little. It was a bumper to bumper thing. Nothing happened. Since it was an accident, that means that you didn't have any control of the accident, and the insurance company will increase 20% of your policy based on your premium. Even if they paid out $1,000 or $10,000, it's going to go up exactly the same percentage. So yes, if there's a small claim, I always recommend to try to fix it or get an agreement with the other person, as long as there's no personal injury or anything like that. So don't do a claim unless you really need.
Okay. So if I'm a good driver and I don't have any car accidents, then if I wanted to shop around though, is there any other way that I would get a benefit of leaving my existing insurance company to go to X, Y, and Z?
Yeah. Always. I mean, I don't recommend you to be shopping around every year or every 6 months or every renewal, because your history is also part of the factors of the insurance rate. So I would say every probably 2 or 3 years, just take a look, talk to your agent. And that's the difference between having an agent and a 1-800 number, because you have somebody to talk to, and then we can again offer you maybe re-quoted with another company. Or what we do in our agency every year, we try to take a look at the policies that are going up, let's say between 5 to 10% or more, and we reach out to the clients and offer them another quote, and it's up to them. If some clients rather stay with the insurance company that they have, even if it's going up, because they had a great experience on the claim. So, but we give them the option. So again, it's just part of our job as an agent to give the clients all that options. Right.
And it's about the education. That's what I love about you and your team too, though. It's about sharing the options, right? And what makes the best sense with that particular scenario, whatever is happening with them at that moment. Before we move on to our next slide, I do have one question, and let's see what it is. I have a condo. What is the difference between insurance and a home? So is there much of a difference when it comes to insuring a home versus a condo?
Yes. Well, when you're buying a condo, you have a master policy, and the master policy will cover the reconstruction of the building itself, right? But the condominium insurance is a coverage that is usually called the walls-in coverage, and that's how it is. Basically, we cover anything that is inside the ceiling, the drywall, the floors, the kitchen, the bathroom, your personal property. So it's kind of different from the homeowners, and the reason is that in the homeowners, you're paying also for coverage, or the insurance company is covering your building, the structure of the home. That's the main difference between a condominium insurance and the homeowners insurance. That one is from the ground up, and the other one is just for the walls in.
Right, because there is a master insurance policy for that building.
Exactly.
And then there is another question, which I do believe we already addressed earlier on, but since it came up again, I just want us to take a quick second. She is asking, why is home insurance different from the price you pay? And I'm not sure if she's asking why the policy, and what we talked about earlier on, Gabriel, is that when you're looking at if something was to happen to the property, right, and you would have to rebuild it, you're not looking at what you're paying for the price, the sales price of the house now. You're looking at how much is going to be the cost to rebuild it. So that's the difference, correct?
Exactly. Yes.
Okay.
So that's why the insurance, the amount of insurance on your home is almost always going to be different from your market value. And most likely it has to be less than that, because rebuilding the property, we're not taking in consideration the land.
Right. There is another question, but it's in Spanish, so we're gonna do that after we're done here. We're gonna go live again, and we're gonna do our insurance in Espanol. But let me finish up this PowerPoint. We're almost done. You're doing so well, Gabriel. I love this. Tons of information. Let me get going here. I know there is one last line that I believe we've briefly talked about it too. Business owners insurance policies. You guys are also able to do that. And again, I know you've got someone in your team. I don't have specific questions, but I do want the audience to know that is available and that you are a resource to be able to help them with that, correct?
Yes. I mean, we do business insurance policies or any commercial insurance that you may need. We do general liability, workers' comp, but the slide that you have here is great for these kind of businesses in general. When you have a storefront business, you will need a business owner insurance. If you open a brokerage real estate firm later on, you will need a business owner insurance. And the reason is that, first of all, the landlord will probably require that for the liability, but also you want to cover your inventory, your property inside of your business and your clients. So the business owner policies is for a business that have a storefront, let's say a warehouse, and they're working on that place. But then for contractors or other kind of businesses, we will have to review what it is, and it will be probably general liability and workers' comp. But we do offer that in our agency.
So that's what I want you guys to take away. They do they do everything. I mean, it's just a matter of you making a phone call or sending that email to Gabriel, and he will make sure that you guys, get the best policy. One more question that came up, Gabriel, before we go is, do you guys do insurance on an Airbnb property?
We do. We have an outlet to it. The insurance companies don't like to do it often, and the reason is that is different people getting in often, and there's a liability, and you will hear from me or probably hear it from me, the liability, and it's why the insurance companies are here, to protect your assets, and they are very careful about that, because we don't know who is coming to your home, what are they going to be doing, if there's going to be a party of 4 or 100. So they are very careful with that Airbnb. So we will have to take a look. We do have an outlet for it, but it's a case by case basis.
Case by case. Okay, perfect. All right, so we're going to be wrapping up. Does anybody else have a question?
I've got a question.
Yes, ma'am.
So I'm a real estate agent too. I've got a closing on Wednesday next week. So the final walkthrough will take place that morning. I'm representing the seller. When should I tell the seller to stop his homeowner's insurance?
I will say right after closing.
After closing.
As soon as you guys go to closing, there's no need for the seller to keep his policy in force. I guess the buyer will have to have their own insurance before closing. The property don't have any gap on coverage. But to make sure, I will do it after closing.
Should we wait for the buyer to close, or are you saying we just need to wait for the seller to close?
I will say for the seller. When you guys are sure it's 100% closed and the seller is done, then just call and cancel your insurance. He can actually backdate coverage if it's a few days difference. He can call the insurance company, just show them the proof of that he sold the home, and they can backdate the coverage a few days, so he didn't pay for those days that he wasn't using the home.
Oh, okay. Thanks.
Yeah.
Awesome.
Sure.
Thank you, Lynn, for that awesome question. All right, so I don't think I see anything else on the chat here. This was awesome, Gabriel. This was fantastic. I love that it was interactive. We had a lot of questions, and obviously that's the purpose of these Zoom meetings, and is to have experts in the field like Gabriel to be able to answer all your questions. There is his contact information as well. For those of you who register to Eventbrite, I will follow up with Gabriel's contact information as well. We're going to wrap this up, and we're actually going to jump on our Spanish version. So for those of you who were asking, stay tuned. We're coming right back, I promise.
Thank you.
Gabriel, thank you so much, my friend.
Thank you, Dinora. Thank you. Thanks everyone for watching. Thank you. See you in 2 minutes.
Absolutely.
Bye.
Bye.